Hi there. I've just put this video together for any of you who are having difficulty with your second assignment, and I'm sure it'll be a help to others for question 2 in the exam. And just, I know sometimes people get confused when they see a whole pile of numbers on a page. This section is very important in terms of analyzing accounts. So really what I want to do is I want to show you just what is expected of you and how to make sense of the numbers and what the numbers are telling you. So in the assignment, you're given data. Now, this isn't the assignment data. This is different data. The question is the same, though, in terms of working out your 12 ratios. So, guys, all you have to do, and you're given the ratios, and you're given what the ratio is. So that's what it's all about. So if we want to get the gross profit ratio at the gross margin, all we have to do is go into the screen and put in our gross profit, and it's clearly marked there for 2021, and then divide that by our sales, and our sales figure is there as well. And we just hit enter, and now we have 27.6%. So that is our gross margin. So we buy stuff and we sell stuff, and the margin we make is 27.60. If I want to do it for 2020, then all I have to do is take my gross profit figure and divide that by the sales. Now, obviously, I have the columns formatted here as well. And if we want to look at 2019, just plus your gross profit and divide it by your sales. So that is all that's involved. So it's literally finding the figures in the P&L and balance sheet and calculating it. So that's the sums. And in your assignment, and you have to do 36 sums effectively. So now that's one part of it. And the same way as your operating profit, it tells you it's your operating profit divided by your sales. And sometimes this causes confusion. So again, it's plus your operating profit, which is your net profit before income and tax, and then just divide that by your sales to get your net profit margin. And of course we can cheat here if we want, and we can just carry that across to work out the 3 years. Okay, so that's section number 1, is the sums. And rather than looking at the totality of the numbers, just break it down one by one by one. So operating costs, we just put in our operating costs, which is there, and we divide it by our sales. So we just pick our sales, divide it, and because I have this formatted, that's year 1, that's year 2, and year 3. So look, it is pretty simple to organize. So we just go down through, no complications, no worries, just do the sums, put the figures in, calculate them, etc., etc. And then if we want to go down to do something different, say the debtor days or whatever, well, then all we have to do is take our debtors from the balance sheet, and the figure is there, the debtors from the balance sheet, and we divide them by our sales as well. Divided by our sales. There we go. And we get a number there. And then if we just multiply that by 365, now multiply by 365 to bring it into days. So again, now we can see that that's 67 days. And then last year and the year before, we can work that out as well. So that's all. It's not an Excel exam. So if you want to use a calculator and write in the figures, that's fine. If you want to do it as formulas, that's fine too. And the same for the exam. So it's just literally a matter of working out the figures. Now that's your first stage, that's the sum. The second stage is where we expect you to write a commentary or give a comment on it. And for this, what's needed, and this is more important than the sums because I know you are credit guys, not accountants. So what I want you to be able to do as a result of doing this course is to look at the numbers. So as we look at the numbers here, say for day sales outstanding, that should be familiar to most of you. So if we look in 2019, our day sales outstanding for this company here was 74.5. Then in 2020, it was 71.6. And in 2021, it's 67.6. So as we can see, they seem to be getting a handle on their debtors. Their DSOs are going down year on year. And to me, that's a good sign that the business is being run. They're focusing on their cash and they're improving their cash flow performance. So that would certainly be a positive. When we look at our gross margin percent, again, in 2019, it was 25.3. It went up to 26 in 2020 and went up to 27.6 in 2021. So the profit figure is on the increase, which means that they're making more money. Either they're buying cheaper or they're getting a higher price. Either way, the difference between what they're buying and what they're selling is increasing. And that's the joy of these percentages and ratios and stuff, because we can compare like with different companies with different sizes. If you said to me the company has a gross margin of 50,000 and is that good? I don't know, because I don't know anything about it. But if the margin is 27%, yeah, that's probably reasonable. And again, just to know that every industry has different gross margin percentages. Every industry has different profit percentages. So it just gives you a mechanism to compare like with the same companies. And if you understand that the things that we like profit and those kinds of things, the higher the number is, the better. So the higher the profit, the higher the gross margin, the higher those things are, the better we like them. The things we don't like, for example, costs and debtors and stuff, then the lower the figure is, the better it is. So literally for the assignment and for the exam, all you're expected to do is, number one, do the sums so you understand where the figures come from, and then look at the sums, not just on their own, but in terms of the trends, and then just write a note. Yeah, this is good because their profits. And if we look at our our operating profit, that's increasing dramatically in this business. And for a business to succeed, they need to be profitable. So, you know, if we see the trends are going up, that gives us confidence in the business. If we see trends going down, that means we're on alert for this company. So really what you're expected to do is, number one, do the sums and do them one by one, and then write a commentary which just shows that you explain what's going on. So look, this is just a simple note just to put you on the right track for now. If you want to, obviously at the revision, we'll be going through the exam and the solutions and all that kind of stuff. Look, there's still 2 weeks to go. Please don't overcomplicate it. It's easier than you think. It's literally just a matter of reading the formulas, seeing what the formulas are, slotting the numbers in and doing the sums. And then, as I said, from a commentary perspective, just to say, yes, I like it because the debtors are falling. Yes, I like it because the profit is rising. Yes, I like it because in terms of our current ratio, let's have a look at this now. So our current ratio is our current assets, and that shows you what your current assets are. And we divide them by our current liabilities, which are there. So now our current ratio is 1.5, which means you have 1.5 times assets to liabilities. And if we look, it was 1.2, it went to 1.3, it went to 1.5. So the gap between their assets and liabilities is increasing. So their solvency is increasing. So their ability to pay their bills is increasing. So out of the 664 in current assets, they only owe 437. So if they can turn their stock and debtors into cash, they have more than enough to pay their bills. This kind of company we like. We like companies who pay our bills. And similarly, the liquid ratio then is just the current assets less the stock. So that's kind of, I hope this little mini lesson will help you somewhere along the way, and it will help you to just to, you know, make sense of it all. So if you have any questions, talk to Angelina or myself, and we're always happy to help. Take care. Good luck. Hope it's helpful. Bye-bye.